What's happening? What's happening? What's happening, everybody? How y'all doing? How y'all doing? How y'all doing? Did I turn? Yes, I turned IG on. Had to make sure I turned IG on. Is it on? Oh yeah, it's on. Go to YouTube. Go to YouTube. Anyway, what's happening, everybody? What's happening? What's happening? What's happening? I'd like to welcome y'all to the Price Action recap for September 15th, 2022. If this is your first time pulling up, I'd like to say welcome to the gang. Y'all see Spidey back there. Welcome, welcome, welcome. If this is not your first time pulling up, welcome as well. If y'all know who I am, my name is Timothy Lee Rogerson. Y'all get on Al Gore's internet every single day, 9 a.m. Eastern Standard Time, 6:30 typically, but during football season, we're doing it at 7:30 p.m. Eastern Standard Time. We talk about the price action. Why do I do it? I do it because I want to show people what a full-time trader would do in just about any situation. I'm all about trying to help people for the free 99. What my phone said? Hang on, we're telling more followers to. Oh, okay. I try to help people out for the free 99. I would never charge for it. I try to explain it in a way that little Timmy Rogers understand it. The voice that's in my head, try to explain it in a way that he understand it, and hopefully I can help somebody else, get that aha moment. Ha ha. Aha. Hopefully I can help somebody get that aha moment, man. If it sounds like something you like, all thing I should do is hit the like button. That's it. Wherever it is. It might be over here on your screen, might be over there on your screen, might even be in the middle of your screen, like it is on my son's iPad. I don't know. Wherever it is, hit the like button for me. That's all I ask you to do. All you got to do is hit the like button. That's all you got to do. Let's get into it, man. We're going to get right into it today. We're going to get right into it. Let me share my screen. Shout out our sponsors. Y'all know our sponsors, the newtlr.com and Banjo. New music streamed by Il Jodam. They're my exclusive sponsors. Who we got up in the chat? What's happening, Tanya? What's going on? Happy Thursday, everyone. Everyone with the money, money, money. What's up here to learn and share? What's going on, Laverne? Hey, that's my mama. Hello, mother. How are you? What's going, Fario? Fario. That's all in the chat, man. I see more numbers than I see names in the chat, but don't nobody wanted to get shout out except for those couple people. The link is in the chat. The link is in the chat. The link is in the chat for anybody that want to pull up and ask the question, or if anybody want to pull up and share something. But we're going to get right into it, man. As y'all see, I have revamped my chart. My chart looks revamped. What, Tim? Why did you revamp your chart? I'm glad you asked that question, little Timmy Rogers. Let's see why I revamped my chart. Let's go up to a daily, go to daily candles. And as you can see, we have come to a very, very, very important area right here. What makes this a very important area? Because today we just ran sell side liquidity on a daily level. We just broke through a major swing low in the after hours, right? We came very close to it during the hours of the New York session, but we just came to a very, very important run on sell side. Now, I adjusted my box to yesterday's high and the low that we made in the after hours so far. That's my new range of the box, right? Why is that the new range of the box? Because that right there is the closest daily high. This is the closest swing high up here, but it's so far away that we got a whole lot of important liquidity in between this swing high up here at 41.7850 and this daily high right here at 39.81.25, right? So that's why I chose the 39.81.25, because that right there is the high that's nearest where we at now, and that's the last up close candle that's nearest where we at now. Right now, we are below, which is today, but it looked like yesterday's low because the futures already started. We are currently trading below yesterday's low, which is today. Follow with me. And this is the closest up close candle to this day where we're trading at. So I'm using the high of that day as the top of the box, and I'm using the low of what will be tomorrow, but the current low right now. If we get lower than that tonight, then I'll just adjust the bottom of the box down. But that's where I moved the new box to, because we ran sell side liquidity, sell side. We ran sell stops at this low right here at 3900.50, 3900.50. We ran the sell stops at 3900.50 in the after hours. That's why I adjusted my box. As you can see, we do have a tiny daily fair value gap resting about 100 points away. Maybe, let's see. The top of the gap is at 38.37. So that's 50 points away. 50 points away. We at 38.87 right now, and the top of the gap is 50 points away. So the top of the gap is 50 points away, resting on the other side of this order block over here. This is the body of the order block right here. We just got into the body of the order block during after hours, right? This is up to the wick of the order block. As you see, we had this order block marked out before. We came down. I deleted it because I wanted to clean up my chart and start fresh with some other stuff. We came down, touched it, wicked off of it, touched it again, got up off of it, came back a couple days later, wicked up off of it, came back again the next day, wicked off of it and took off. Got the ping out off of this order block right here, off of the wick part of the order block, the part that's the most sensitive area of the order block. We wicked off of it 1, 2, 3, 4 times. On the 4th time, we got a ping out. Then we came all the way back up here and filled in this fair value gap, got into this order block right up here, the same one we had marked out before. This is old stuff we already marked out. Got into this order block, and then we got a ping out to the downside. Came all the way back down, right? Took care of all of this gap work that we left over here, offered the sell side liquidity for all of this run, got into this order block right here, wicked off of it 1 day, wicked off of it 2 days, and then today we came back through it and then got back down into the wick area of this order block again, wicked up off of it. There's some other stuff in there we got to too that I deleted out. We'll go back and look at it in a minute. And then now in after hours, we opened up and pushed down into the body of this right here, of this order block right here. Now, that's why I set the box here now. And the reason why I moved it, because now we've come to an important spot. Now, I'm just gonna go ahead and see it. I'm looking for the market to, since we've run this sell side, now I'm looking for the market to go back up and start to target liquidity to the upside, right? Start to target liquidity to the upside. My first target is the top of the box. That's my first target, the top of the box. Second target is this humongous daily order block that's right here that I don't have marked out yet. I don't want all that junk on my screen, so I ain't marking it out. And then my last target is above this daily high, this swing high up here at 4178.50. That's why I adjusted everything, because now that we've run these sales stops, right? Do I think the market want to get down here to this daily fair value gap before pushing up? I don't know. You know what I'm saying? But this right here, combined with this order block, to me, feels like the area where the market had been trying to get to this whole time on this retracement, getting back to the premium. Remember I said the big boys like to sell at a premium, buy at a discount, right? We had got all the way down into a discount right here, stop, right? On this whole retest. Remember, this was the retest for the bull rally. On this whole retest, we came down, stopped there, right, and started to come back up, got back up into a premium. This was the equilibrium for the retest, right? Got into the premium and then dropped it like it's hard. Now that it got into the premium without taking this, got into the premium without taking this high at 42.34 and without getting all the way back to the top of the bull rally at 43.44. It left those highs alone, and then it came back down and ran this sell side liquidity. Bow, took it out. Now, combined with this order block running this sell side liquidity, that's why I say now this feels like the target that the algos was trying to get to off of this retrace right here, back up here to premium. We had sold off so much into it, we got all the way down into a discount from the entire bull rally, right? This was equilibrium for the entire bull rally, right? So we came all the way up, started testing the rally, right? Got back into a discount, right? Got back into a discount, got back into the break of structure of the consolidation, right? This was the start. This was the confirmation. Got back into the discount of the original consolidation, right? Went back up, got into a premium of the retest, right? Got back into a premium market from the entire run, took care of some of this gap work, all of that right there, left the high alone, didn't take the buy side liquidity, left it alone. Then we came back down and ran the sell side liquidity. Now, that's why I say combined with this order block, running the sell side liquidity. Now this feel like, okay, it's time to start pushing back up and take care of some of this liquidity that we left behind, right? So now let's drop down a little bit lower. I'm going kind of deep into it because I don't know if I'm gonna do the overnight price action in the morning, but just in case I don't, that's why I'm going so deep into what I want to see. Okay, price today, right? 8:30. Once price opened up, it was back and forth today. Gave everybody a chance to eat. If you was day trading, you ate to the downside, ate to the upside, right? Everybody got a chance to participate if you decided to trade. If it was too volatile for you and you sat on the side, more power to you. It was more downside opportunity, but it was plenty upside opportunity too, right? Came out this morning. We came down, pushed back up, came down, took out some sell side, pushed back up, took out some buy side over here, right there, poked above the buy side a little bit, then sold off pretty hard, came all the way down, took out some sell side over here, then pushed all the way back up, right? Pushed all the way back up into some lower fair value gaps down there. Some lower fair value gaps down in there. This order block here got back up into it. Let's drop down to 15-minute real quick. Boom, right there. 15-minute fair value gap right there, came up into it, right? Then sold back off until late, about 3:30. Then right at the end of the day, after we ran sell side liquidity down here, pushed up nice and hard toward the end of the day. And then we closed right at 39.1850. Then once we closed at 39.1850 after hours, we pushed up a little bit more, right? Took out that high, then turned it around and sold off. And then that's when we finally took out that low over here from the 6th, I believe it is. Yes, the low of the 6th, which was last Tuesday. Last Tuesday's low. We finally took that out, right? And looking at the other indices, the Dow, held up the strongest today. These daily candles, right? So looking at the daily candles, the ES didn't take out Tuesday's low until the after hours. We came close to it during the day. This Tuesday's low right here, this actually the 7th. That's actually the 7th. I said the 6th the first time, but it's the 7th, right? So the 7th, which was last week Wednesday, right? So that's that low there. We took it out in after hours. On the NQ, we took it out during the day, during the New York session. We took it out during the New York. I can drop lower to find out what time, but and then with the NQ, I mean with the Dow, we took it out. We took it out yesterday. We took that low out yesterday. Boom. We took the low out yesterday. Right. So, and then today, so the Dow took it out yesterday, the NQ and the ES took it out today. Right. So once the Dow took it out, as you can see, the Dow, I don't know if you can tell over here, but there's a fair value gap right there that the Dow got into, and a potential order block there. On the NQ, it filled a fair value gap there. It's a couple more fair value gaps, a 4 hour and a 1 hour that's a little bit lower, that's down here in this wick. Don't know if the market want to come get that or if it's happy with that. And then we already talked about what it is on the ES, right? We already talked about what it is on the ES, dropping down a little bit lower to the 60-minute. And as you can see, this is why I say the Dow held the most relative strength today, because when we look at the low from the 14th from yesterday, look at yesterday's low right here on the ES, right? Yesterday's low on the ES, we took that out at noon today, right? Yesterday's low on the NQ, we took that out at 11 o'clock today, right? Then yesterday's low on the YM, right? We didn't take that out until the 4 o'clock candle, right at the end of day. We didn't take out that low until the end of day, right? So the Dow was holding up the with the most relative strength, right? The most relative strength on the day. Because if you look at the bodies of the wicks, even going from the high of the day, from the high of the day to the afternoon high, so from like the 11 o'clock high to this high right here, this high there, from that high that we made a much lower high on the ES, we made a much lower high on the NQ, and then we made a relative equal high on the Dow. So the Dow was showing a whole lot more strength on the day, staying propped up, whereas the NQ and the ES was showing relative weakness compared to the Dow. And now all three of them have run these important lows together. They all have run these important lows together. So the Dow was showing strength, and then it ran the lows, you know. So that's why I say this feels to me like we done got to a very important spot of running liquidity that the algos was trying to get to, and we're going to start pushing back up to get some of that liquidity that we've been leaving behind. Can it keep selling off? Yeah, keep selling off. But like when I look at the price action, I don't want to be that person to say, oh, we've been selling off for 4 days, we deserve a relief rally. What is that based off of? How you feeling? Because you tired of the market falling? Or you'd be like, oh, typically on Friday, after a long a down week, Friday, we typically get a pop. What is that based on? Is that a statistic, or if that's just how you feeling? Right? I like to base it off of what I see with the price action. And what I see with the price action, that's telling me it's a high probability with what I'm seeing with the price action. Even if you put it on a 60-minute chart and squeeze it up. Put it on a 60-minute chart and squeeze it up. You can see more detail where, you know, we chopped around there. We ran lows over here. This is when, what time frame is that? Sometime in July. Sometime in July. I can't see my dates, but that's sometime in July right there. Came down, made a low right there. So that's around the July low, right? July 14th. That's got to be because it was the July 14th low. So it made a July 14th low. Just looking at the price action coming up, consolidated, popped off. Shout out all the people who know how to see all of the market maker sell models and market maker buy models, right? Got us a big old A right there. I don't know, you know what I'm saying, which is which. It's a really big A right here, the huge A. The overall move is a huge A, right? We got us a V right here. That's a V there. It's a V there. If you want to look at this, that's an A right there. You know what I'm saying? All the little market maker buy models and sell models. I don't know which is which. I know one is an A and one is a V. So, you know what I'm saying? You go and you can see all the little buy models, sell models. So you have a A, you got an A followed. You have an A followed by a V. That's how it be, an A followed by a V. The people who look at the market maker sell models and buy models. And that's all, you know. I don't get into all of that, but that's why I say that's where we at. Because as you see, we've come. This is why I say we've come to a very important spot of where we just ran liquidity at up under those daily lows right there. After this big move down where we only offered buy side. Sell side. We only offered sell side, consolidated over a few days, then sold off and ran liquidity, right? We continuously ran liquidity to the downside. We weren't really running major liquidity to the upside. Every time we popped, we fell short of the major liquidity to the upside, and then we continued down and just ran under the major sell side. But yeah, man, that's all I got. Let's go look at Spylene and see what she looking like. I haven't cleaned up my Spylene charts. Yeah. Sing it with me, y'all. Spylene, where you at, baby? Here I go. There she go. Hey, Spylene. Hey, how you doing? We same thing. It's the same order block that we was looking at before, the one we came to. Wicked off of it, came back to it, wicked off of it, then pushed up, and now we done got through. We're it's still, this is the body of it. We're still inside the full candle of it. It's the same thing on the ES, right? I just still got it marked out for the body. We got down into this weekly fair value gap in the after hours. As you see, we sold down some more, right? We sold down some more, got below these lows. Remember I told you in after hours we went below the lows, and after hours is the same thing on the spot. We stopped just short of the lows during market. Now after hours we've gotten down below these critical lows again. So, and it's the same thing. Got below the critical lows, came right here to this order block, same thing, and then they go the same fair value gap, the one that we had on the ES. All of that's the same. I just still got all this other junk up top, right? Move all this other stuff out the way. Really don't need that. I'll leave that like that. That's fine. So yeah, it's the same thing with the SPY. The same stuff I already said for the ES, same thing for the SPY. We've come to, you know what I'm saying, an important level where we pushed back up to a premium, sold back off to a discount. Once we got into this discount, we've ran below significant sell side liquidity. Now start pushing back up. That's the first target. Then again, boom, the second target puts us right back into the premium market, and be, just like I said, be ready for whatever Powell got to say for FOMC. Just like we said before, take it up to a premium, sell it down, You know what I'm saying? Get back to a premium, wait on Powell, so that if Powell say something stupid, we can sell it from a premium. If he say something that we like, we go ahead and continue to pop back up. You know what I'm saying? Same old thing. Everything's still the same. Ain't nothing changed. We've been singing the same song for the last week. Um, what? Zay was up, man. Why y'all ain't block Zay? Why y'all ain't tell me Zay was in here? Why y'all ain't block Zay? Let me see what y'all talking about. I'll put the link in the chat one more time for anybody who want to pull up. The link is in the chat. The link is in the chat. The link is in the chat. Let me see what y'all talk about up in here. What's up, 100? Zay gone. He said he gone. I saw he said he was gone. What's up, Haitian Pete? What's going on? That weekly candle bullish. I believe we print a weekly close of 38.35, giving us roughly a 5.5% weekly loss. What they said? 38.35. Oh, you talk about keep selling off all the way down here? Zay talk about keep selling off all the way down here? 38.35. I don't know. We'll see. We can see. Uh-oh. We can see what it do. We can see what it do. We can see what it do all the way down to the bottom of the order block. We can see what it do. Let's see. Let's see. Why is it not showing? Why does that not show over there? Why is that not showing over there? Why it look like the candle stopped? See how it kept going here? I guess it don't hold on. This is on what's the name? Session breaks, no time zone. How do you look at? I thought it was a way to price regular. I thought it was a way to look at like all of the, cause this the ES and seems like it should be. See how the NQ still ticking? Oh yeah, it is. It is ticking. Oh, that's the wrong contract. That's why. No, it's not. That's the Z contract. Why does that look? Why does that look totally different? Oh, it's a delay. But still, when it opened up at the bottom of that wick, and this opened up way up here. I don't know what's going on with that. That's totally different. I don't know what's going on with this this ES on this what's the name? See, called the US 500 is below the wick, just like the other one is. I don't know why that's looking like that. Does everybody ES on the is it a different ES on Trading View? Is that the right ES? is that's it. That's the only one. That's the only one that's showing. Okay, it looked different. It looked different now. What just happened? What just happened? I clicked on ESZ 2022. That need to get out of here. Why does that one look different? Get out of here, you ES. I'm sorry, y'all, for getting caught up on this like this right here. But the other one, I think the other one like went farther back, like when it showed like the what they call it, the continuous contract or what? See, continuous contract, current trunk, next contract in front. Let's see what that would look like. Nope, that one don't look right either. I'm so caught up right now, as y'all can tell. I'm so caught up right now. That one right. So that's what we're gonna roll with. And how do I add it to? I don't know nothing about what's the name, as y'all can see. Okay. Where did it go? Where did it go? Oh my God, I'm going crazy right now. I promise you I'm going crazy right now. Where did that just go? Okay. Oh my God. That just drove me crazy. I promise that just drove me crazy. And what number did I put that on? 3835. 3835. Cheese and rice. That right there. Oh my God. That just drove me crazy. 3835. All of that. Man, next time y'all see Zay, tell Zay I'm gonna choke him. All of that for trying to get that line on there. Cheese and rice. Let me put this back on Spylene and go see what y'all talk about in the chat. I'm highly pissed off right now. I ain't even gonna hold y'all. I'm highly pissed off right now. September is now down 2%. We will do at least 5%, meaning during September the market will get to 37.50 roughly. Okay. What's that based on, Zay? Give me some stats, some statistics, or some kind of reasoning behind that. You pop in and say that and then talk about something gone. Get out my live. What's going on, Cool It? Buenas tardes, Valdez. What's going on, Gabriel? The futures are delayed on TraderView real time. Yeah. It was delayed, but it wasn't. The candles wasn't showing right. Like, you see now that's showing right. How when we opened up below that low. Now it's showing. Before it was showing as if we were still inside that count. It wasn't showing right. Even though it said it was the Z contract over here on this little red thing, it wasn't showing like the Z contract. It was still showing as if it was like the old contract, the U contract. When I had the ES1 on, it was showing as if it was the other contract. Right? When I go to the ES1 like that, see how it look? It's showing, it say the Z contract, but it's showing as if it's the old U contract. right? But it say the same price. This right here say 38.94.25. That say 38.94.25. But when I click on that one, you know what I'm saying? It's in a different spot. It's lined up different. I don't know what's going on with that. I'm using MES for all my new drawings though. Yeah. They what's the name? It's crazy. Yeah, the Fed's watching. You didn't add it. Thank you. I figured that out after I double clicked it and took it off. Hey man. Hey, I'm telling you. Hey, I had to got 38 hot. I ain't even gonna hold y'all. I was so mad just now. I'm glad y'all can laugh at my pain. Yeah, I got $374. What that is? T-Tonio. What that is? $374? What that is? If I trade futures, I would still be in my contract on the way to my final target of 38.31.75. 38. You say 38.31.75? You below Zay. You below Zay number. That what's that? The bottom of a fair value gap? That's 38.22. What's 38.31.75? What's that number? Let me make this skinnier. Zay ain't that important. Let me put the line skinny. I'm putting the skinny line for Zay. You say 38.31.75? What that number is? 38.31.75. It's just below Zay number. What's that lining up to? What's that lining up to? Stacks? God dog it. What's that lining up to? God dog it. Why in the world is this? Oh, I know why. It copied info line. Why in the world did it? Why in the world did it do that? Oh no, he ain't that important. Change that to smaller letters. Get out of there. All right. Now that I mark that, what's that target? What's that target based off, Stacks? The middle of that fair value gap, the middle of that order block. Is it something on the weekly? What is that based off of? Nothing on the weekly. My entry was 39.7. The line was a drop from bad news. That line was a drop from bad news. What line? I was saying, what was your target for? Recession, just planning where I could go. Oh, where it can go for worse. Oh. You ain't had like no hard reason for that target. It was just like, you know what I'm saying? That's where you was going. Weekly, monthly target for the from a standpoint of where price could go. Okay. It wasn't targeting like a specific low. It was just like a range where you was okay. I could work with that, man. I could work with that. I got it on the chart. What's that? That's your September target. That's your September target. Zay said September gonna give us. We gonna close. but where it is now was my target. Oh, your target was up here at these swing lows right here, and that was just a stretch goal. Okay, if I'm understanding you right, Zay Big Bear, Zay a Big Bear. Zay say the month gonna close way down there. Oh no. He said the week. Zay said the week gonna the tomorrow. Oh, September. No. September was 37.50, and he said tomorrow we gonna close down. No, Zay said we closing down here tomorrow, and then on the month we closing down here at 37.50 down here, just before we get to this low right there. 37. Now, if I'm picking a target, I ain't gonna hold you. I'm not gonna pick a target that's slightly higher than the swing low. I'm letting you know straight up. I can't even co-sign that one, right? I can't co-sign that target right there of 37.50 because the swing low is at 37.41.75, right? That's just 10 points. That's just 10 points above the swing low. That's nothing. You know what I'm saying? That's nothing on a monthly stand frame, and not let alone a daily, because this is a daily candle right here, and 37.50 would be right there. That's just a stone. That's not even a stone's throw away from the swing low. I can't co-sign that one. If it was below the swing low, or if it was at least at the swing low, I'd be like, okay, let's see. But on average over the last 5 years, September only averaged down. What did we look up yesterday? What was it yesterday when we looked it up? Stock charts. God dog it. What was it yesterday when we looked it up? Wasn't it like a little over like 2? We did 2%, but I think it was like 1.2% on average. 1.2% on average. Right there. And see, I knew it had changed, because see, it changed again today. You know, I guess because it's adapted, because 2022 is in here, so it's accumulating all the data. So that's why it's changing, because we dropping so much, it's going up because 2022 is in here. Because if I take 2022 out, see how the number changed right there, because 22, because I'm like, I know that said something different yesterday, but since 2022 is in here and we steady dropping, it's taking that into account because we dropping so much in September. Okay, I'm following now, right? But 5% is a whole lot more than one. It ain't even near a month on here that it averaged 5% down. I don't know. We'll see. We'll see, Super Bear. We gonna see Super Bear. Super Bear, Super Bear. What else we got? Got that. Wish I was working. I would join and share my chart. Okay. Weekly monetary standpoint. Yeah. I saw that. 100-point move. Let's say I sent the picture of my chart. IG. See my screen. You sent it to my IG? It said disappearing message. It said disappearing message. I can't. Oh, that's from June. That's from June. What is it? Oh, there it is. Talk about this line, right? I don't see nail number. Man, if you don't get off my screen with this, I don't see nail number. I don't know what I'm looking at. I don't know what I'm looking at on here. I don't see nail number. I see a line. I see a bunch of dollar signs. Okay. Y'all give it up for Stacks, man. Y'all give it, yay! Y'all give it up for Stacks. Y'all give it up for Stacks. Yeah, you say so beautiful, don't y'all agree? You say the yellow line where we at now? Okay, the yellow line is where we at now. Okay, so the yellow line right here where we at now. And then this the other line was, and then this is the line down here, the one you was talking about getting down to. This the bottom line with it, the bottom of this this little range thing, like this was your risk to reward. That's the bottom down there you was talking about when you was like that's on your way to your target. You was talking about this trade scenario right here. Yes or no? Man, y'all give it up for Stacks, man. Y'all give it up for Stacks with the beautiful artwork. With the beautiful artwork, man. Hey, I ain't got nothing else, man. I ain't got nothing else. Let's see how this work out. Let's see how this work out tomorrow. Let's see what the future's doing real quick before we tap out. We ain't doing nothing still. We just kind of chopping around like normal Asian market time frame. We got down to this area. Let me go where my lines and stuff at. We got down to the spot where I marked as the new bottom of the box so far, and we just doing the Asian range thing. We just danced around. I see T works. All I'm saying. Yeah, my whole position with stop loss. Okay. That was this morning before he moved. Before the move happened, reason why I'm saying if I trade. Okay. All right, gotcha. With the beautiful artwork. You know what I'm saying? You know, when you go to your kids' school and you be looking at their stuff when they be like in kindergarten, and you be like, oh yeah, that's so nice. Oh yeah, that's so nice. Okay, man. We I just noticed this right here. I didn't mark this before because we had this counter hadn't closed, but we got another 60-minute fair value gap to the north side of where we trading at right now. Okay, boom. So this is where we ended the day at right here on this candle with the long wick. Right, we hit it and we wicked up. Right, that was at the end of the day right there, and then after hours we pushed back down, and then once today's candle started, today meaning when the future started, we pushed down here and we made a 60-minute fair value gap. So now we have just run liquidity, right? We have just run liquidity and started to wick back up. So that's why I say we just ran major liquidity. So now that's why I adjusted the box, and I'm looking for now we got this fair value gap. That's internal liquidity. We got this fair value gap. That's internal liquidity. And then we got this swing high and this swing high. All of that is the internal liquidity for our new box. The top of our box is 39.8125. The bottom of the box, as it rests right now, is 38.8725. Right? We have just run sell side liquidity throughout today and after hours. And let me double check. This was the old swing low right here. Right there. That was the old swing low right there. And as you can see, we didn't run the liquidity until after hours. Right? As at market close and at the 5 o'clock hour, we still failed to get the liquidity. Right? So we just ran the sell side liquidity. Boom. Now sell side has been taken. The market is over for us, but the algos, the price is just continuous. You know, they don't care nothing about our market breaking all of that right there. So boom, we just ran sell side liquidity. So now that we've run the liquidity, that's why I marked this as the new bottom, right? So now this is the new, all of this is the internal liquidity for our new box, right? For our new box. We got a 1 hour fair value gap that we're just now pushing back up into. As you can see, we're just pushing up into this 1 hour fair value gap, right? The top of that fair value gap is at a breaking structure. So now what you want to start looking for, I almost forgot to say that. I said what I was expecting to see happen. What you want to start looking for the bullish scenario, right? For the bullish scenario, what you want to start looking for is the market start to have breaking structures to the upside, right? Start having breaking structures to the upside and retracing back, and fair value gaps and in order blocks and stuff like that start to do their job and start to push price back up toward the internal liquidity, right? We just ran through, you know what I'm saying, the sell side and got a closure on the outside of the box, right? We ran through the sell side and got a closure on the outside of the box. Boom. We closed on the outside of the box. Blip, 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 adjust, make a new box, right? So now this, everything below here is like the external liquidity. I ain't got nothing marked out except for this daily. Let's go over here and see if we can see anything real quick on the hourly of any great significance. Okay, we have not may look like it may be a teeny hourly fair value gap there. Let me put this line here. Right, look like it may be a teeny hourly fair value gap there. Maybe. We got a swing. That is a swing low. We have a swing low right there. So I'll mark that. Right. If anything, for external liquidity, there is a swing low right there at 38.7250. There is a swing low right there for external liquidity, but that is external liquidity now for this price move right here, right? And the internal liquidity is the path of least resistance, right? That's the path of least resistance, the internal liquidity, right? So that's why I say it's more probable to go after the internal liquidity as opposed to going after the external liquidity when we just spent all of this momentum in power, or whatever you call it, running to the external liquidity from here. Right there. We just ran it there. So now what you want to look for the bullish scenario of going back up to the internal liquidity, you want to start to see the market break structure to the upside and start trading back down. Let's drop down, see what the 15-minute look like. Okay, we consolidating, right? We consolidating here. We just poked above the consolidation, right? So boom, we just took some buy side to the top, right? We got some sell side within the what's the name? Let me go ahead and mark that because that's internal. That's internal liquidity on the 15-minute level. We got some sell side inside there, right? We got some sell side inside there, some internal sell side liquidity on the 15-minute. What did I do with Tim? I copied the wrong number. Why y'all didn't tell me I was copying the wrong number? Okay, so we got some internal sell side liquidity now because we got a swing low there. We just took out, you know what I'm saying, some 15-minute buy side liquidity right here. So now what we want to start seeing is the market make that's technically a breaking structure right there, because that is a teeny tiny swing high right there. That's a teeny tiny swing high. So that's technically a breaking market structure right there on the 15 minutes so far. Let's drop down to 5 minutes. Okay, so on the 5 minute, you can see it a little bit clearer. We got a breaking structure right here on the 5 minute, and we got a 5 minute fair value gap right there. So now what you want to start to see for the bullish scenario is the market start to break structure. Like here, boom, we came up, we just broke structure there. We got a fair value gap here. So now you want to, like, we made a fair value gap here, and then we traded back down into it. Well, we traded to it there, pushed up, traded to it again here, and pushed back up. So now that we've broke that structure there, it's possible that we still can come back down to totally fill in this fair value gap before pushing up, or we can continue to push up. You got a breaking structure here, and now we got a fair value gap to the upside with two down closed candles there. So now you're gonna be looking for this fair value gap to start to do its job, right? Which is hold price. These down candles, you look for them to do their job, which is to support price, right? That's what you're looking for the bullish scenario. Just continue to, you know what I'm saying, continue to do that. Move up, break structure, move up, break structure, move up, right? And then this right here is a breaking structure to the downside. So you expect price, once it get there, you expect price to be sensitive to this area, to this breaking structure, to this gap down. You expect price to be sensitive there. Boom, maybe hit it and come back down and then fill in this fair value gap, or hit this fair value gap, push up, right? Come back down and then fill all the way in this fair value gap down here, or maybe even take this internal sell side liquidity and then continue to push up. That's the bullish scenario. Just flip it on its head for the bearish scenario, right? We just took liquidity at this blue line right here, right? So now that we took liquidity at this blue line right here, we just ran liquidity. Now, usually when you run the liquidity to your sell side liquidity, when you run it, you go back to deliver it to either another liquidity pool at a swing high, or take it to, you know what I'm saying, a fair value gap, or somewhere where it's some liquidity to match it up with. You know what I'm saying? So we just ran liquidity under here, and if you know, in the bearish mindset, if you think it's going to keep pushing down to get even further outside the box and keep going down toward more sell side liquidity that I don't have marked out right now, then you'll be looking for it. Now that we ran liquidity under here, that's a breaking structure. You'll be looking for it to get back up into this breaking structure, maybe into it's this is a that's a 5-minute fair value gap from here to there. That's a 5-minute fair that's a 5-minute fair value gap right there. And it's got a gap down at the top of the fair value gap there. Right? So you look for it to come back up. This area right here, this breaking market structure where we ran liquidity, and the top of this fair value gap at that breaking market structure, you will expect price to be sensitive right there and then push back down. Now we're coming back down into this other 5-minute fair value gap. Let's see how price react to that. Well, I'm saying let's see. Probably won't be sitting here and be watching it all that time, but price coming back down after break this little slight breaking structure there. It's coming back down and getting into this fair value gap. Let's see if it do its job and push it up back to the breaking structure where we ran liquidity in the after hours. and see how price react to that breaking structure and to this breaking structure. But that's pretty much all you do, man. You just use your tools that you already got in place. You already know what the market has done today, right? You see what the market has done today on the 5-minute level. You see here we came down. You see how we, you know what I'm saying? You just backtrack, look at what the market did, and then decide, okay, what's the highest probability? In my mind, the highest probability is going after the internal liquidity. In somebody else's mind, the highest probability would be like, hey, it's super weak. I think we're going to keep selling down. You see what I'm saying? So you want to go back and look and see what the market has done for today. You know what I'm saying? Let's just go from the market open. Let's go from the market open. Right here from the market open, we opened up, right? We pushed up and consolidated, right? Buy side, pushed up with the buy side, right? Came down, offered the sell side, consolidated again in the same spot, right? We consolidated here, we collected longs, offered buy side, consolidated there, collected shorts, offered sell side for balance that area out, consolidated in that same spot, collected shorts, offered sell side, right? Consolidated again, popped up, offered buy side to take care of the bottom half of it, right? Came down again, sell side, came back up, offered buy side to balance all that out, wicked up hard because all of this right here was already balanced between that. Pum, took off hard, all that was balanced out, came back up into that area there, balanced out the top piece of that right there, pushed up into this fair value gap right there, made that intermediate swing high, boom, into this fair value gap, and then came back down, you know what I'm saying, sell side, pushed up a little bit, offered some buy side to match this out, right? Consolidated some, pushed down some more sell side, right? Then offered up buy side, took care of that part, pushed down some more sell side, right? So now we done made a bottom. We done offered a whole lot of sell side, but not that much buy side. Again, that's why my thesis is more probable to come take care of some of this internal liquidity because we have run through a lot of sales stops. We've got into a discount. We're in a discount market, and the big boys like to sell at a premium, buy at a discount, right? And right now we hit that 5-minute fair value gap, and we're pushing back up just a little bit. Let's see how that play out. I keep saying let's see how that play out, like we're gonna be sitting here watching it. But that's all. That's what I do, man. Hopefully I explained it clear enough to kind of help people see the way I see it, the way I read the price action. And then if you still in the mind of, okay, we bearish, right? We've come down, made a high, went back up, made a high, left the buy side, right? Made a short little high, it's like we came down, made a high, right? Ran sell stops, came back up, left the buy side liquidity, ran sell stops, right? Came back up, left the buy side liquidity, right? Ran sell stops. Now we consolidating. See, it's like we was taking sell stops, sell stops, sell stops, sell stops, sell stops, sell stops, and we ain't did a whole lot of taking buy stops. Yeah, we took some buy stops here, we took some buy stops there on this run, and then that's it. That's the only time we took any buy stops, and that was during lunch. So we came down, and then lunchtime we took buy stops there, got into the fair value gap, right? Came down, didn't take buy stops, came down, didn't take buy stops, came down, that little poke there, didn't take nothing. And then now we consolidating and we push back up on that 5-minute candle. This 5-minute fair value gap so far is supporting price off of this breaking structure right there. So far it has supported price. I don't know how long it's going to support it, but it has supported price for right now, for at least 5, 10, working on 15 minutes. It has supported price at that what's the name, and we inched up just a little bit higher. So anyway, but yeah, man, hopefully that was helpful to somebody. And like I say, if you're in the mind frame of it still going down and getting to the external liquidity, then you would want to see it at least fill this fair value gap right here, because we broke structure at this blue line. We broke broke structure and ran sell stops at this blue line. And now that we ran sell stops, you want to see it deliver it somewhere, right? Preferably at least above a swing high, like up here into this hourly fair value gap. Get up into this swing high up here, above this swing high, to match it up with some buy stops. We ran sell stops. At least get up here and match it up with some buy stops, and then come back down. But since it's such a significant area of buy stops, all right, let's go up to some daily candles, because it's a significant daily area, right? It's a significant daily area with buy stops that we just ran. You want to at least see it get above the top of our box at a minimum, after running sell stops this significant coming off of here. Because think about it, the people who sell stops are below this, they went long here, and if they held on, they held on all the way up to here. If they held on that long, right, and we sold back down, and they ran their stops, the market want to at least get back above this one. I'm thinking up this high from running off of sell stops this significant, but that's really far. We coming in front of FOMC, you know what I'm saying? That right there is a week or two away in my mind, right? But if you're still bearish and talk about getting all the way down here, you would just be looking for the market to retrace back up, maybe to the close of this candle, which is at the New York close, which was, what did I say that was at? Right here. Get back up to this fair value gap right there, right? And then go back down. Stacks, you put a dissertation over there. You put a dissertation. This brother solid. Oh, I appreciate you, Israelite Prince. I hope he leave. Oh yeah. All my videos stay up. It's a long one, but all I'm up there on the if it say if it's a dinner discussion, like the way you find videos on my page, if you go to my page, right? I don't know what my page look like when y'all go to it, right? But if you go to my page, right, you see it's a Tim Tidbit original, Tim Tidbit overnight price action, right? Those are the morning videos, the overnight price action, right? If it's something we did in the morning, it's in overnight price action. Tim Tidbit dinner discussion, those the price action recaps. It's gonna be in this playlist, right? And all of them got the dates of the day that we did it. It's a dinner discussion 9:15. The weekly wrap up, them the ones we try to do on Fridays. Friday night lights with football been stopping us from doing that. And then Tim Tidbit live. These are the videos that we do on Sundays, right? When we get together on a Sunday at 3 o'clock, it'll be in the Tim Tidbit live folder. Tim Tidbit original. These are the original 7 videos that I did with my friends and family. When I first started doing Tim's Tidbits, and I was doing it with my friends and family only on Zoom. Those are the original 7 videos. And then the lunchtime lessons, those were some things that I was doing where I just pop up during lunchtime if I was bored, and just start going over some stuff that I was looking at or thinking about or whatever. But all the videos still up there. And if you get bored and want to see me and my family hanging out, you can look at our old Adventures of Super Dad videos back when we was vlogging as a family. Me and my son, we did some TNT podcasts. It was just like me and my teenage son talking about stuff, a dad and his teenager talking about stuff. That's what it say. And then if you want to know about how me and my sweetie met, relationship goals, got how we met, how did you know they was the one, our proposal story, and then staying connected. If you want to know about me and my sweetie, we did that right there too. That's the breakdown of the YouTube channel, man. What you talk about over here, Stacks? The way these guys jumping out of the building and stuff, I'm expecting more downside Trade what you see. I will adapt accordingly and continue to use my field finding discounts and premiums. That's it. That's all you can do. Look for the discounts and the premiums. Look for when it moved to a premium, start looking for reasons to sell. If it don't give you no sale set up, just keep on buying. When it moved to a discount, start looking for reasons to buy. If it don't give you no buy set up, keep on selling. You know what I'm saying? I appreciate that. He makes it so easy to understand along with a lot of laughs. Okay. I appreciate that. I appreciate that, Prince. Can you repeat that, please? Repeat what? Repeat what? Cool it. Repeat what? Which one? Y'all know I don't be reading the chat, man. You put that in there 10 minutes ago. Y'all know I don't be reading the chat. If you got to pull up. If you pull up, then you can get my attention then. But I don't be reading the chat. You did your thing today. This morning was powerful, and the close right now is so informative. Thank you for what you do here. I appreciate you for always pulling up stacks. Stacks, you be coming through, you know what I'm saying, with the gym. When I be putting stuff on the charts from what y'all be saying, it be so I can go back and like really do a deep dive and try to see it from that point of view, because I don't want to get stuck in my bias. I appreciate y'all when y'all be giving me y'all input. You feel me? I be appreciative because it make me go back and like really look at it and analyze it again and be like, what did I miss? What made Stack see that? Why did he see that level? What did I miss? Why I ain't have that level on my radar? You know what I'm saying? We didn't get our song. Tanya, you missed it. We did do the song. What time you came in? You must have came in late because we did the song real late today. But since you say we ain't get it, we gonna go back. We gonna go back because we can't leave nobody out. We want everybody to have the opportunity to sing along. If y'all already sung it, guess what I want you to do? Sing it again with me. Y'all come on, here we go. 1, 2, everybody sing. Spotline, where you at, baby? Here I go. There she go. Spotline don't never get tired of us singing that. You say all of it. Hey, look here. Hey, cool it. Go to youtube.com/thenewtlr and go to the dinner discussion playlist, and it says Tim's Tidbit dinner discussion. That's supposed to say tidbits. Why y'all ain't tell me I ain't been putting the S on all of my videos? Why y'all ain't tell me that? It's supposed to say Tim's Tidbits with an S. Every last one of the videos, because I just copy and paste and change the date. Yeah, man, y'all done messed me up. Y'all got me out here looking like I ain't go to BA, man. Y'all stop playing with me, man. That's it. It's over. The live over. I'm done. I'm finished. Hey, I appreciate y'all for hanging out with me, man. I've been on here a long time. Hopefully, I really, truly, I say this with all sincerity. I really, truly hope that I've been doing a better job at breaking down why I'm looking at what I'm looking at and what I expect and why I expect it, right? Always know both sides of the story and have your plan set up for whichever way the market go, right? You can have your bias, you can have your whatever, but if it's not playing out and know when your bias is wrong, right? Let me say that let me talk about that real quick before I get off, right? Know when your bias is wrong, right? Let's go down here. Let's drop down to 15-minute candles, right? Know when your bias is wrong, right? Okay, so here we go. We looking at this, how we was looking at this 5-minute right here when it was we was like, okay, it was support and price, we pushed up, right? And then we pushed through, right? We came all the way through and looking like we done filled in something. It was something lower than that. Let's drop down lower and see it's some 1-minute stuff up under that 5-minute. That's why I be talking about when I be looking at gaps. A lot of times I'll come down and see how it's like a one. You remember the other day when we had a 5-minute fair value gap and then we had some 1-minute fair value gaps up under it, and I was waiting for price to come down to the 1 minute, and then it stopped at the 5 minute and took off on me. You know what I'm saying? But I was saying know when your thesis is broke, right? So if you're in the bullish mind frame, right? When is the bullish thesis broke for the short term, right? For the short term, the bullish thesis is broke, right? If we come down and close below this swing low right here, right? If we come down and close below that swing low right there, then we need to start rethinking it, right? Because we didn't even get a pop off of, we ran liquidity here at this blue line. This is the liquidity run. We're in the liquidity run right now. We're swimming in the liquidity pool. We dove in, burger, sploosh. We dove in the liquidity pool. Now we're swimming in the liquidity pool, right? Right? If we start going up and start breaking structure to the upside, right? And continue up, if give us a setup to go up, then the bullish in the short time is working. But if we come up, hit this breaking structure right there, hit the liquidity pool, hit this breaking structure, and then reverse down and then close below this swing low here, okay, it's time to start looking down. And then guess what? Because we already came this far, this ain't the time to be trying to say, okay, I'm gonna go short right here. Not for me, because we done came from here all the way down to here. So the risk to reward is to the bullish side for me, because we done came all the way down here, just ran liquidity. I'm not gonna come back to this breaking structure trying to go short right after running this far down. That's just me. I'm not going to take that short. Y'all know I need to sell at a premium and buy at a discount. The only time I would be looking to take a short off of this price leg here would be back in the premium market of this last, really this last leg down there, right? That last leg down there, if you want to, you know what I'm saying, if you already been in on this part right here, but I ain't trying to go short on the end of the price leg, right? I need to get either this piece or the entire leg, right? So again, coming back to at least this green fair value gap right there. I didn't even know that was equilibrium. I was just eyeballing a good spot. Coming back above this swing high and into this fair value gap, that's where I would start being interested in maybe taking a short off of this right here, right? That's when coming back up there, that's when little Timmy Rogers will be interested in taking a short off of what we've done so far, at least coming back to here, right? But as far as coming back to where we broke structure right there and selling, nah. We done fell too far, and we're still in a discount market. Anything below, what is that right there? Anything below 39.32 is a discount market on this price leg right here. So I ain't trying to sell nothing. Anything below 39.32 is in the discount market. So I ain't trying to sell nothing. That's just me. That's just the way I trade it. Once we get above that, preferably to the top of this fair value gap, if I'm still bearish, then I'll start looking for a sell setup above this right here. Right? If we came up here and started consolidating right across from this consolidation right there, then I would be looking for a sell setup if I was bearish. But looking for a sell setup down here, not little Timmy Rogers. I can't do it unless we broke down and got a closure below 39. What is this right here? 38.87.25. If we got a closure below 38.87.25, then I would start looking for a sell scenario to go down there. That's it, man. That's all I got. That's all I got. I ain't got nothing else. I appreciate y'all. I know this was a long one. I appreciate y'all for hanging out with me this long. It's almost 9 o'clock at night, man. I apologize for keeping you this long. I apologize for running my mouth this long, but this morning I woke up, I was like, I want to do something a little different. Did something a little different this morning, and then this evening I just got to run in my mouth. I don't know. It's something just came over me, and then my sweetie ain't home right now. she's still at work. Like I say, I'm gonna definitely try to get on in the morning. I don't know how long I'm gonna stay on if I do get on, but excuse me, but it's Friday, and then we ain't gonna be able to do the weekly wrap up because Junior got a varsity game tomorrow night. So yeah, man, I'm gonna definitely try to get on in the morning and chop it up with y'all at least for a little bit. Y'all give yourself a brain break, man. Push back from the charts. Forget about everything that little Timmy Rogers said. Go hug your spouse. Tell them you love them. If your parents still alive, call them up. Mama, daddy, I love you. If you got grown kids like me, call them up. Hey, daddy love you. Mama love you. If your kids at home with it, go out there and hug them and kiss them. Tell them you love them. Ain't nobody promised tomorrow. If you got them little fuzzy kids, them little furry kids, don't kiss them, but just go tickle their belly or something. Yeah. But yeah, man, I appreciate y'all. I see y'all in the morning at 9 o'clock, and we're gonna chop it up for just a little bit. Gone, man.